Welcome to Pete's Property Podcast, brought to you by Buyers and hosted by Pete Wargent, buyer's agent, finance and real estate expert, and all-round property guru, plus published author. Join Pete for 30 minutes as he chats all things property with a new guest each week. Learn practical tips from the movers and shakers in the property industry and well-known personalities sharing their property journeys.
G'day, welcome to this week's episode of the Pete Wargent Property Pod. It's really great to have a familiar face back on the show, Melinda Jennison from Streamline Property Buyers in Brisbane. Melinda, welcome. It's great to have you back on.
Thank you so much for having me again, Pete. It's good to see you again and looking forward to sharing some insights on what's happening in Brisbane.
Yeah, I think that's what we really want to get from you today, some granularity. We see a lot of headlines about what might or might not be happening in the market, but obviously being someone who lives and breathes Brisbane real estate, I think it'll be useful to get some granular insight. So I'll just run through a brief bio. So Melinda's always been interested in real estate from a very young age, onto the Brisbane housing market at 18, I think, just a couple of years ago. And coming from yeah, well, we're in the same boat there. So you're coming from a research background with a PhD. Melinda was moved into real estate originally in the building and construction and property development industry, but now heads up as the managing director of Streamline Property Buyers, helping their clients to understand the importance of having a proper property investment strategy. And Melinda's a QPIA advisor and, as we mentioned, very active buying in the Brisbane market. So, Melinda, what's happening in Brisbane this year? We've seen a lot of headlines about the market being cooler after a very manic 2021, but what are you seeing up there?
Yeah, it's a good question. And I think that we've all been a little bit scarred by what we experienced in 2021 because that market was the abnormal market. And I think now we're comparing everything that's happening to last year. The reality is that Brisbane was still extremely strong, both through January and February this year. And then, of course, we were hit with the floods at the end of February. And that was the first big event, I guess you could say, that impacted on the Brisbane markets. It did scare a few people off. And then, of course, we had a pending federal election. Interest rates started to increase over time. So whilst other markets were impacted much earlier in the year than Brisbane, I mean, we still had price growth across both the housing and the unit market until mid-year. June was the peak. Brisbane then started to see the median values decline from July onwards in the housing market. And in fact, the unit markets performed quite differently. So, you know, these are off some really big price growth. So Brisbane had, for a period of time, was leading the price growth over a 12-month period throughout Australia. If we look at the peak in June, the year-on-year price growth in Brisbane was, for houses, was up 27.4%, and for units we were up 15.8%. So really strong price growth. And yes, the market's come off when we look at those median values just in the last few months, especially in the housing market. But the unit market, if we want to talk about being granular, the unit market's been a lot more resilient over that time. So yeah, happy to sort of get into the nitty-gritty of that through the podcast.
Yeah, cool. Before we come on to what's been happening in recent weeks and right now, let's just go back a couple of months and just talk about the proposed land tax changes, or they were actually legislated, but now apparently shelved. Did any of that stuff, we've covered it in previous podcasts, but did any of that stuff make any difference to market sentiment and what investors were planning to do, or is that kind of all washed through now?
Yeah, it's a good question. I think that there was definitely a lot of headlines around the proposed changes well after it was actually legislated. I think as we, approached the time frame closer to when the housing summit was announced, that's when it became apparent through the media, and that's when people sort of knew more about it. We'd certainly been advising clients to get advice because it was legislated back in December last year. So I think it's only when the media started talking about it that it became a real issue, and that definitely had an impact on the level of inquiry and also the confidence that a lot of investors had to, make a purchase here in Queensland, and they may have been looking at other alternative locations just to avoid the change. Nobody likes change. It brings a level of uncertainty, and, people want to feel confident when they're investing such large sums. I think also a survey that PIPA put out, Property Investment Professionals of Australia, actually showed that about 30% of the investment property stock in Queensland sold over the last 2 years. And people that completed that survey cited that the number one reason that they did sold was related to the proposed Queensland land tax. So it definitely had an impact on the market. And I think common sense prevailed, because had that have been legislated, I think it would have caused further impacts in terms of the number of investors that wanted to stay in, because of course it was retrospective, and it impacted people that had built a portfolio around the current planning or the current laws of land tax, and that was the biggest issue that people had.
I was recently down in Melbourne and went to a PIPA seminar, which was originally designed to discuss the Queensland land tax, but at which point it had already been shelved. So I did hear some of those same statistics. I was interested to see questionnaires that they put out that every year, Southeast Queensland is the number one location for investors looking. So you get a lot of people in Sydney and Melbourne who own a home, but when they're coming to add an investment property to the portfolio, invariably the number one state of choice is Queensland. So obviously you get a lot of inquiry from interstate. What I wanted to get onto today, Melinda, is I've seen some headlines, Brisbane housing prices falling, and I've seen even with my own eyes some properties selling that would have sold a year ago for 7 figures and now sort of fetching around 900. So there's definitely been some examples of prices coming off. But then on the other hand, we were just tracking a property in a suburb, Coorparoo. First open home was on Saturday. There was 180 inquiries. First open, there was multiple offers, and no doubt it's gone under contract today. And also just at the top end of the market, some massive prices being achieved. And even out in suburbs way beyond what you'd think of as Brisbane, out in places like Caboolture and places like that, just big prices always popping up here and there. So what's going on? Got headlines talking about prices falling, but then I've seen other examples of prices being red hot. So what are you actually seeing at the granular level?
I think it's a great question to ask, because data is fantastic for reporting on large trends, but people have to understand what properties are transacting to understand what is making up that data. So we know that we're in an environment where sales volumes are slightly down from where they were 12 months ago. I think CoreLogic's reported for Brisbane, we're down about 7% year on year. So there's a slightly smaller volume. When we get down to looking at trends in terms of median value trends, of course, we're reporting on the middle value, the median value. And if there's been a change in what is actually selling, that can impact on the median value trends. So what I mean by that is that typically in a market that we're experiencing, certainly in the last couple of months in Brisbane, it's very property specific. You can't sort of say this area is performing this way and that area is performing that way. It's very property specific, because it does come down to the demand for a particular product or a particular property and how many interested buyers there are. Like you, we've experienced same or similar examples where in that those brand new builds, those new renovations, those family homes in desirable locations, the demand for those sorts of properties in Brisbane over recent months has been really, really strong. And we also have so many examples where a property might be listed first open home on a Saturday, closes with multiple offers, the following Monday, 3 days later, and achieves, a record price for the suburb. Now, that's out of alignment with a median trend, which is reporting property values are declining. So one thing that we've noticed on the ground is that the gap between buyers and sellers for a lot of properties has increased. And what that means is we're seeing that a lot of vendors are holding onto their properties and they're not transacting. So the seller doesn't meet the level that the market's prepared to pay, that seller and that property does not become part of the data trend. So there's a lot of properties that, have been on the market, days on market, in fact, have actually doubled in the last 12 months for Brisbane. So we're seeing this trend where there's more older listings and therefore what is selling, the people that are the motivated sellers or the people that need to sell for whatever reason, and the people that are prepared to meet the market. And of course, we're in a market where the buyer sentiment has been significantly impacted by rising interest rates, high inflation, and the media headlines, which are suggesting that property prices are crashing. So, we're definitely not putting a blanket approach on what's happening in Brisbane, because even when we talk about property prices, most media talk about dwelling values, whereas, when we break that down into what's happening in the housing market in Brisbane versus the unit market, it's a very different trend, because houses have come off 7.9% from their peak in June when we look at that median value, whereas units have increased over the same period 0.5%. So I think it's really important for people to understand what is it they're looking at, what product type, and also the location, because a median value trend does not always tell a full story of what's actually happening on the ground.
Yeah, I often wonder about the value of suburb or postcode level data, because even within a suburb, as you know, you can have streets that are on highways or streets that are prone to flooding, but then other parts of the suburb in higher ground might be very highly sought after with views and so on. Now, I recently saw a suburb record price, which probably ties into what you're saying in Kedron, where I think it was a turnkey development in the Hampton style, and it was, I don't know, from memory, high 2 millions or something. So obviously there are some parts of the market, as you mentioned, particularly in the family home market, that are doing really well. But I guess the other side of that is if prices are falling on a medium basis, there must be other property types that are struggling. Are you seeing any particular types of property that are not achieving the same prices? Would that be things like development blocks and or properties that need a lot of work?
Absolutely. I think anything that needs a lot of work, it's gone out of favour with buyers. Any properties that even 12 to 18 months ago were flying out the door because people were trying to get their hands on anything, properties that needed to be knocked down to be rebuilt. Of course, those sorts of properties have become, the demand has really dropped off for a couple of reasons. One, it's really hard to lock in a builder to actually do the improvement works because the construction industry is so stretched, and there's so much uncertainty around building prices. So for people to actually purchase a home to renovate, or purchase a property to knock down and rebuild, even developers, it's very difficult for people to lock in build costs, and therefore there's a lot more risk in today's market compared to, where that was 12 to 18 months ago. So anything that needs a lot of work, definitely been out of flavour. And there, in fact, for anyone that's still in the market for that sort of product, there have been some good buying opportunities. It's much easier to buy closer to land value for something that needs to be knocked down. So construction, and the fact that labour's been really hard to secure has probably been one of the primary causes for that.
Yeah, that does make sense. Materials and trades prices have been so high that there's less appetite, I think, for doing major renovations. And of course, a lot of that was stimulated anyway with the government stimulus packages. So probably seeing the downside to that trend at the moment. A lot of people just don't have the appetite for a major project at the moment. So that does kind of make sense. Now, interesting from a demographics point of view. So Southeast Queensland saw the highest net interstate migration on record in the 2022 financial year. So we've never seen, even during the mining boom years, we never saw so many people moving to Southeast Queensland. Now, I've just noticed just over the last month or so, up on the Sunshine Coast anyway, people who moved up from Melbourne, lots of houses suddenly going up for sale, and people thinking, well, actually, I want to move back. I want to go back to the big city because you can't really get anything to eat up to 7 p.m. It's a little bit quiet. You can't go to the opera. And I guess we often see this in regional markets. But I'm assuming in Brisbane, it's not quite the same dynamic, because Brisbane has all of those things in its own right. And I guess you've still got the comparative affordability compared to Sydney or Melbourne. But are you seeing any sort of COVID reversals in Brisbane, or is it just holding firm?
It's a good question. And a lot of people ask us about this, because a lot of people, ask about will the outer suburbs become more popular over time because of the impacts of COVID? I think that we really have to consider COVID as a life-changing event, absolutely, but is it going to have long-lasting impacts on the way we live and work? And your example around, people did want to actually make that move for lifestyle reasons, and then they've made that move, and then they realise that actually that's not what we really want. We do like the hustle and bustle. We like our lifestyle in the busier locations. I think also over time, as Brisbane becomes more populated as a city, commute times to get into and out of employment hubs are only going to increase. So whilst that work from home phenomena became more apparent during COVID, I think there's more and more industry or businesses that are now asking workers to come back into the office, if not full-time, at least for a number of days per week. So I think that there's a reversal in that trend already. And we're seeing, through our own inquiry, some of the trends of people relocating to southeast Queensland, certainly to Brisbane. We're still seeing that through our own inquiry, where people are able to work from Brisbane, but potentially commute 1 or 2 days to Sydney or Melbourne, some of those big employment hubs, but they're able to, set up somewhere that's close to airport, to the airport to get to and from the other capital cities. So I think that's a trend that potentially could continue, but I guess it depends on the industry that people are in. And Brisbane's obviously a lot more accessible because of our airport than some other areas, around southeast Queensland for people that follow that trend.
Very topical, as I had to go to Brisbane International only last night to pick up a family member, and it's very, very easy. You can just drive in. You don't have to go into the CBD, cruise up, pick up the arrival passengers, and off you go. So it's a very easy international airport to visit. Just in terms of the properties for sale on the market. So pre-pandemic in Brisbane, I guess give or take, we were running at about 30,000 or so listings. And obviously, as you mentioned, through COVID, we went through an exceptional period there where listings were falling every month, to the extent that at the beginning of this year, we probably had about half of that number of total property listings. Now, things have recovered a bit, but just looking at the figures up until last month, October 2022, there's still only about 20,000 listings. So we're way down on pre-pandemic levels, about 20,000 or so. Does that sort of tie into what you've been seeing, that stock levels are still actually relatively tight overall?
Yeah, new listings are down, I think, 25% compared to this time last year. So when we're looking for our clients, what we're interested in is what new is coming to the market. And then what we're finding is out of that stock that's coming to the market, there's a real lack of quality. So it's not just how many properties are coming, but, are they the sort of properties that we would want to be buying for clients? Because we've seen a number of properties recently in some of the inner city locations that are being sold as is, flood damaged properties, for example. Now, that's not the sort of property that we would typically be recommending for people to buy. We've seen more properties on main roads, more properties that are impacted by noise. Like these sorts of properties tend to be the properties that people offload when times get tough, because investors might have purchased them and they think, well, let's offload them before, the market crashes, because they believe that might happen off the back of the media messaging. So we're seeing more B and C grade properties come to the market. And of course, they tend to sit longer because buyers have become more picky and choosy about what they would consider spending their money on because of the change in the market as well. Last year, everything was selling regardless of whether it was impacted in any way. But now, especially off the back of the second flood in Brisbane within a space of 10 years, that's been a big shift in the mindset for people buying flood impacted properties, but also just returning to a normal market. This is where buyers actually take the time to discover whether the floor plan is right for them, whether the school catchment's right for them, whether they would consider the compromise of being in a busier location, listening to that road noise. And in most cases, buyers are willing to wait, especially when the market's not growing in value at a significant pace month to month, that was the fear of missing out that we experienced last year. And that's why a lot of buyers just made compromises to get into the market. We're not seeing that anymore. So B and C grade properties are just sitting on the market for a lot longer.
Do you want to save on buyer's agent fees? You could save thousands with Buyers Buyers. As Australia's most extensive network of buyer's agents, we can lock in highly competitive prices, Plus, our national network of buyers agents are some of the best in the business. So get the buyer's advantage and talk to us today. Call 1800 975 051 or visit buyersbuyers.com.au.
I was reading a report this morning on housing supply, and it mentioned how, of all the capital cities, Brisbane is the city that's going to be grappling with undersupply over the next decade, which is kind of interesting because 5 or 6 years ago, it was kind of the other way. There's units going up all over the place, largely sold to offshore investors in mainland China, but then those investors kind of got taxed out of the market. And this report was saying that developers have struggled to sort of get projects to commence, partly for the reasons you mentioned, the lack of availability of materials and trades. But the demand is just growing and growing for Brisbane. You mentioned before the unit and townhouse market, or the sort of strata type of properties, have been performing a bit differently from the detached house market, I guess because they didn't have as big a boom, maybe a bit more resilient at the moment. But are you active in that part of the market, and what kind of trends are you seeing?
Yeah, it's a part of the market we haven't been active in until this year. So we observed back in 2014, we had a change in our city plan in Brisbane, and that resulted in a lot of previously zoned industrial land being rezoned for medium and high density residential use. And that's why we saw this huge boom in the number of high density units that were developed throughout our city. 2016, we hit a peak in the number of units that were coming to the market. So peak supply was 2016. And of course, that had a huge impact on property prices in that high density space. You know, they came off a lot because there was too many properties and not enough buyers. So the supply and demand metrics were out of balance. Now, of course, in that time, since 2016, the number of new properties that have been developed has been declining, but at the same time, the demand has continued to increase. You've talked a lot about interstate migration. We've got international migration also. A lot of the international migrants typically would rent higher density apartments before they might look to buy or rent elsewhere. So a lot of that stock's now been absorbed, and we've got that shortage that you've mentioned, that there's not a lot of new stock that is in the pipeline for development. There's not as much land left for redevelopment, and developers are actually finding that they're having to rip up pre-sales contracts because it takes a lot for a big development to get out of the ground, because they do need to generally have a number of pre-sale commitments. However, with the huge increase in the cost of construction, a lot of developers that might have had a number of pre-sales in the pipeline have had to rip up those contracts whilst their developments have become less feasible. They simply can't build them for the cost that they had originally planned to. So that's really put a handbrake on any new supply coming through. And because we've still got this huge demand from people moving and relocating to Southeast Queensland, we've just got this shortage, and it's not something that's going to be solved overnight. So previously, the number of investors that have sold investment properties that were purchased by home buyers over the last 2 years in Queensland off the back of that PIPA report. So, you know, in terms of the amount of the stock available, whether that is properties available for sale or properties available for rent, it's not looking good in the future. And therefore, when we're looking at the supply and demand metrics, whilst we continue to have affordability, you know, high rates of interstate migration, now with the international borders open, we'll have those international migrants coming through. Demand will remain strong. Yes, it gets dampened for some people with rising interest rates, of course, but we've still got those other demand drivers here in Brisbane for property here, which I think long term will have a huge impact on maintaining the balance, and therefore we really won't see prices crashing.
Something that ties into that is the rental market tightness. And just going back to what you were saying about 2016, I remember when the vacancy rates in Brisbane were over 4% about 6 years ago. And I was living in Brisbane at the time. Suburbs like Newstead, you just look at the new developments and think, gee whiz, there's not many lights on in some of these new blocks. But over time, they filled up, I guess, anticipating the demand that was to come. And as you mentioned, a lot of things have come back into balance. In fact, at the last count, the vacancy rate was well under 1% for Brisbane, I think 0.7, which we never even saw during the mining boom years. We never got that low or that tight. And I see that asking rents are up 20 to 25% over the year. So is that something that you're seeing in terms of very tight rental markets? And presumably, based on what you've just said, that's likely to continue over the next few years now the borders are open?
Absolutely. Yeah, you're right. SQM vacancy rates citywide currently sitting at 0.7%. We look at some suburbs that we buy for investor clients and vacancy rates are, 0.3, 0.4%. There's literally nothing to rent. And there's instances where prior to settlement, if a property is actually listed for rent, you'll have multiple applications sight unseen from tenants and usually above asking price, simply because people are desperate, and it's not a great situation at all. It's not something that we as landlords have control over. It's just a consequence of circumstances over the number of years leading to now, whereby investors have been leaving the market. There's been so much disincentive for investors, so people have just given up and sold out, and there's not been any incentive to get more investors in the market. So we have a situation where we've got really low volumes of quality investment properties for people to rent. And so therefore, when people are looking for a home to rent, there's just not enough stock available for them. And that's what's pushing the prices up. It's not because landlords are being greedy. It's not because interest rates are going up. It's simply because there's simply not enough investment stock. And yet the demand for those investment or those homes from tenants is so high.
Yes, I mean, again, at Sunshine Coast, we've seen a little bit of a reversal there. There's a few more listings coming onto the market. But I do think these lifestyle markets like Noosa, they tend to be more pro-cyclical. People, when times are good, they buy holiday homes. And when there's a slowdown, they tend to sell them. I think the capital cities tend to be a bit more consistent through the cycle. So piecing all of this together, Melinda, what do you expect for Brisbane in 2023 and the next few years? What's your outlook?
I always love it when people ask me this, because there's no guarantee of what direction we might be heading. And of course, there's so many world events that could change what I'm about to say. But I think once we reach a period where interest rates stabilise, just based on the foot traffic that we're seeing through the homes that we're inspecting in Brisbane, the demand from buyers is still there. I just think right now there's a lot of nervous people. There's a lot of people that are very uncertain, and there's a lot of property buyers that are just lacking confidence. But I feel once we have some more certainty around interest rates plateauing, certainly if we see inflation start to come off, I do think that buyers will jump back in. And unless we see a huge uptick in the number of properties being listed for sale, I think we're going to see a recovery of prices. I don't think it's going to be anything like what we experienced throughout 2021, but just based on the volume of buyers that we're seeing and, the tight supply market, I think that prices will stabilise and then start to grow again. And if we're looking at a 5 or a 10-year outlook, the outlook for Brisbane, in my opinion, it's extremely positive, simply because the economy right now is very strong. We have an extremely strong labour market, so very low unemployment. The amount of infrastructure projects that are currently underway, these sorts of things create jobs. They benefit people that live in the local community. But I do think there may be a shift in the next 10 years in the way we live in Brisbane. There really has to be, because of the projected population growth. We can't continue to spread out like we have in the past, and therefore I think we will become a more densely populated city. And so it's important to see what will Brisbane look like 10 years from now, because I think it'll be quite different to what we look like today. And therefore, it's understanding how will we commute, how will we move around the city. Those sorts of questions will help us to identify areas that we believe will be desirable in the future, not just desirable today. So I'm very optimistic for the long-term future of Brisbane. Until we see interest rates stabilise, I think we'll continue to see a mixed market where it's very property specific. But just based on the volume of buyers that are still in the market, but just not necessarily participating, I think that the recovery will come sooner rather than later.
Yeah, that makes sense. I actually just had one related question to wrap up, Melinda. I get asked from time to time about the Brisbane Olympics, which is 10 years away, and people roll out statistics about how cities that have hosted the Olympics have generally seen sort of boosts to their economy and infrastructure and investment, and by virtue of that, housing prices. And I was just looking at a list of the top 20 development projects in Brisbane at the moment, and gee whiz, there's a lot going on with some of these developments are huge, like Queen's Wharf and some of the stuff at North Quay and all around the place, West End and so on. Do you have any sort of insights into what the Olympics might mean for Brisbane? I guess it's just one factor among many, but is that something you take into account?
It certainly is, because I think the Olympic Games here in Brisbane is quite a different Olympic Games to other modern world Olympic Games events, in that 57% of the major Olympic Games venues in Brisbane are going to be within 5 kilometres of our CBD. So this really is a capital city-centric Olympic Games, and therefore the infrastructure that's being developed around the Olympic Games is actually going to have more benefit and impact on those inner city locations because of that fact. Whereas, you look at Sydney, they built a precinct at Homebush, which was, well removed from the CBD. So I do think that, the infrastructure that's coming in Brisbane is very centric in relation to the river and the venues around the Olympic Games precinct. And because of that, I do think that the impact long term on Brisbane, will continue to endure well beyond the Olympic Games, because it's not just the infrastructure that's being built for the Olympics. It's actually, once that infrastructure is built, it will be there for the long term for the benefit of residents in and around Brisbane. So I'm very optimistic that the impact on our city may actually have longer lasting effects than on other cities where they build a satellite city for hosting the Games.
Yes, I mean, that's the thing that really stood out, I guess, from this huge list of projects and planned projects, is just how many of them are close to Albion and the Gabba and the CBD. And it's fairly centralised in terms of the development that's underway and proposed. So that does make, in that context, a lot of sense. Melinda, if people want to find out more about you and more about what you guys do at Streamline Property Buyers, where should they go to find out more?
Easiest location is the website, streamlineproperty.com.au. There's information about what we do, how we help investors and home buyers there, and it's easy to get in touch by completing an inquiry form from the website.
That's perfect. Thank you so much. So it's always great to get your granular on-the-ground insights as to what's going on down in Brisbane. And yeah, we look forward to seeing how things play out over the next year or two.
Thanks, Pete. It's been great to provide an update, and look forward to speaking with you again soon.
Pleasure. Thanks, Melinda.
Thanks for listening to Pete's Property Podcast, powered by Buyers Buyers. Don't forget to subscribe and join us next time as Pete chats all things property with a new guest. And just a reminder that the information provided in this podcast is general advice only and doesn't take into account your personal financial situation or needs. You should always consult a licensed professional to discuss your individual personal